following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host. Once more into the breach do we go, dear friends. As we start the show, we'll check in with that old Mr. S&P. What's he doing? He's down about 8 points so far. But I was thinking we might get a bounce out here. I think Apple's foray into China put the whammy on the market today. The most interesting thing, though, is option market makers still are more afraid this market goes up before the end of the day. This might be one of these days of yesteryear when you could make a great deal of money, and I mean like putting your kid through college money in the last 30 minutes of the day trading the OEX. I think that was over maybe 2005 or 6. Maybe 2005 or 6, somewhere in there. But man, you could make a lot of money with a very tiny amount of risk buying options for the last 30, 45 minutes of the day. This market really seems like it's wound up. Didn't have a lot of volume on the way down. Had a little bit more volume on the way up. We went to a low of 2062 on the S&P cash, but we're at like 2070 right now. So somewhere in there, off 8 points in the S&P cash. No real juice to the downside. Of course, everybody's very worried about the British exit, but we will soldier on. And why am I getting that? Oh, that's why. Wanted to get a few things going here. Let's do this first.
The following takes place between 2 p.m. and 3 p.m.
And had some emails, so we'll go through those earlier in the show. Talk about one of our trades. I'll talk about the other one. Probably be on Monday, though, because I'm not out of it yet. I still think that there's a chance to make some money, or at least get out of it on flat, but we'll see what happens. As I said, I think maybe this is one of these days where we're going to go into the last 30 minutes and see a great deal of action. My thought right now is to the upside. We've tried the downside. Keep trying the downside, and there just isn't any juice. We do have a ton of people that reshorted it again this morning, and the question is whether these people just go out sideways or we get a bounce. And you know, this almost all the action today has been building steam up for some kind of action. This is quad witching, so we're going to have a lot of action at the end of the day. And the option market makers continue to think that there's something, they're going to pull a rabbit out of the hat. They could be wrong, but they tend to be some of the best traders on Wall Street. We've already banked some big coin. One of our trades from yesterday in the daily newsletter was a buying calls on IBM for less than 50 cents for the 150s today. And I had one email here. Let me find it. One of my guys says he got out, for 355% in less than 24 hours. So not a bad payday on those IBM options. The other ones we're going to try to figure out if we can get out flat on by the end of the day. But we shall see. Even if we end up doing a bogey on those, we're still, 255%? So for the two trades, I had a bunch of them that I was involved in myself that weren't in the newsletter, mostly because they moved too fast by the time that they presented themselves before the newsletter could even go out. They had already bounced 0.5% or something yesterday. So we didn't get into those. but I'm still got a few of them that I'm playing myself. So if I act a little distracted, it is because I am spinning some plates and juggling balls at the same time. So just give me a little bit of extra leeway today. You can call me at 877-927-6648. Email me at path@tfnn.com. And, of course, as always, put a message in the den.
Then it's all just a little bit of history repeating.
It is history repeating, and boy, did I forget to. I certainly did. Or did this just not come through correctly? I think it I thought I did it. Let's take a look here. There we go. Hang on 1 second, and I will get this up. Nope. Sorry, broke. We'll just move on. Unless we have the same history we talked about yesterday, but I've got plenty of things to talk about today. There's a big trouble in Little China for Apple. Apple's, as we've discussed for a great deal, has some big problems. That is that they, or every company that goes to China thinking that they are going to make big money, pretty much ends up with the same kind of problems. Hang on, what is that here? Okay, there we go. With the same kind of problems, and it's hard for me to actually figure out just what these guys are doing. But yeah, I've got, by popular request.
I like Chinese. I like Chinese. I like their tiny little trees.
And what you don't like is, of course, that if you do business in China, you better be prepared to do business with the equivalent of the mob. It is one China, and you are not part of it. As we've said before, money in the stock market goes to die in China, mostly because they could care less whether or not we do anything. And of course, our trade policies are pretty much pushed by a bunch of chickens that work at the State Department, and they're more interested in making sure that no one's upset or no one's feeling bad, or you know, maybe we haven't had a group hug long enough. And of course, China runs away with everything. Now, what's going on in this deal is that Apple is being put over a barrel. I'll guarantee you that there are a bunch of back channel things going, you know, maybe your Apple iPhones could sell here in China, but, you know, you have to let us know how all this stuff works and how you build it. And, you know, can you give us all the intellectual property behind this? And, you know, we need a little bit more information on this and that and the other so that we can copy it all and run you out of our country. Anyway, that has been the standard modus operandi since since China actually got into being a capitalist country. They are very smart, and it's not unethical to go out there and skin people that are weak and worthless and should drop and give you 20. I blame our politicians and the people in the State Department as weak and pathetic. Drop and give me 20. Give me another 20. Anyway, you're not going to make any money in China. They're not going to allow you to unless they can take all your stuff. We'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
John in the Den says this is merely Qualcomm in China version 2.0. I say a version yes. But here's one of the things that I've seen that is almost 100%, and that is when you see or hear or read from some analyst about something called the total addressable market. Many times it's just abbreviated TAM. They will say, there's 1.5 billion people in China, and if you just got 1/10 of those, well, there's always a bunch of flawed logic in that. One, maybe 1/10 of the people could actually afford your product. The other part is whether or not the government would even let you sell anything of any kind of value into their country, even though it's made there. But normally, if you start hearing people talk about TAM, I would run for the hills and or short. It's always a road to, not bankruptcy, but despair. It's never a great thing, and it's almost always the last thing someone, an analyst, throws on when his other side of his company is selling it left and right, and he's out there trying to say and prop it back up. I don't think it's the end of Apple, but it's always, it was first going to be the watch, then it was going to be all these sales in China. It's always a bunch of things, and the answer normally is, if it was going to be these things, they would already be selling them now. It wouldn't be, something coming down the road. They've been there a long time. iPhones have been out since 2008. Really? You're going to tell me that it's taken 7, 8 years finally before Apple's really going to have an opportunity to sell? There are some there, but the Chinese government, you're not going to be allowed to make a lot of money and take a big bag full of it, like the monopoly guy crossing home plate, a giant bag of it out of their country. It is not allowed. And of course, unless we get some people willing to go toe-to-toe with the Chinese and even go to the length of putting on an embargo and or trade restrictions, we've had probably the first part of that with steel. And look what happened to our steel stocks once China couldn't dump steel anymore. You know, those are some of the things that will probably have to be done. But for some reason, tech is the last that anybody wants to do, because somehow they have just a warped thought that China is going to give us a big bear hug and say everything is going to be okay. In the reality, they're going to do everything they can to keep our products out and their products in. This phony design patent in China is just so ludicrous on the face of it that it's laughable. Of course, we've got 6 days to go before the Brit exit. More and more people talking, but as far as I can tell, it looks like the die is cast. There will be an election, and they will be leaving. My thought would be that if they were leaving, we wouldn't just see a little bit of selling. We'd see a ton of it. And instead of the 4.8 to 5.2 billion shares that I think we should be seeing on the downside to signal that everybody is amscraying, you know, amscray, right? A little pig Latin there for you. We would have it 2.4 billion shares today, 3.5 billion shares yesterday. There is no volume that I see. And of course, the volume numbers I use are for the New York Consolidated Tape. That includes all shares traded anywhere on the ECNs, on the floor of the New York Stock Exchange, the Amex, literally everything traded anywhere other than the stocks on the New York Stock Exchange. What else do we have going on? A big thing in the markets is actually going to happen here very shortly. I don't know if it's after 4 o'clock or in the 3 o'clock hour, but for those who've been around, there was a giant shouting match some time ago, about 2 years ago. And this kind of started the whole thing. There was a gentleman starting a new kind of exchange. It is called IEX. They filed an application to become a national broker. And we'll get into that here in just a second. But this argument 2 years ago came out with the book Flash Traders. And there were a lot of discussions about what is true and what is not. The CEO of BATS at the time was Bill O'Brien. He was coming up on trying to get or just came out of a IPO that was failed. But he blatantly lied and had to be fired about a month later after everybody figured it out. But he was and didn't want anybody to know exactly what was going on, and that is that almost all these companies front run our orders. So he lied about it. He had to get fired because everybody proved and knew that he lied about it. Got passed around a lot. But the IEX application is going to be approved or disapproved today. What does that mean to you as a trader? It would mean that if it is approved, I suspect that IEX will have a huge amount of business. And the important part of that is what they're doing. That is that they will slow down the trades to approximately about 1/3 of a second delay. And that will put an end to almost all of the high frequency trading. Of course, everybody from BATS to other ECNs that rely on high frequency traders to front run our and also manipulate and run the table on the markets will. But what you could expect is a great deal lower volatility and a lot less flash crashes if this is approved. But that's basically it. IEX would probably be approved already if it wasn't asking to allow this 350 millisecond delay on every single order. But my guess is that most companies that have nothing to do with high frequency traders would instantly move to IEX, and why almost everybody on Wall Street is claiming bloody murder. Now, if you think that the big oil has people running around with spreading disinformation, it's amazing to see the letters that have come in for comments for IEX. A ton of these. In fact, there's a great letter on a website that shows how almost all these people against it either work for, around, or in one of these high frequency traders, and about half of them work for BATS. I think you can probably figure out that BATS has a very bad taste in its mouth about if this going through, and just what kind of volume would be cut from them if this is approved. Not real sure if they're going to ask if anything else can be changed, but just by slowing down the market a little bit, which actually the NASDAQ says that you shouldn't be able to do, and even if they are approved, I suspect you will get a court challenge. But this would be a big deal. It would dramatically affect the amount of shares traded each day. It will not happen overnight, but it is going to be very interesting, because as we are big volume traders, this would be one of the biggest things. Effectively, unless you wanted to be front run, you could go to this exchange and pretty much know that you would not be. A very important development to the structure of the markets. When we come back, we'll go look at some charts.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we are back. We're going to look at a few stocks out here today. Give me a call at 877-927-6641. Is that right? 877-927-6641. Yeah, anyway. 648, excuse me. I'm having a senior moment at the moment, apparently. Like this chart here on Adeptus Health, ADPT is the symbol on this one. gapped up, had some nice volume on the 24th of February. Did so on 1.7 million shares, came back, tested it, 650,000 shares, March 29th. Back in here today with 300,000 shares. As I've told you before, I kind of like these charts where you get about half filled of the gap on lighter volume. So not a bad looking chart out here. What else is going on? Nice little test yesterday in Aviva. Aviva? AV is the symbol on this one. You've got a low at 770,000 shares at $11.45. That goes back to February 24th. Went through there with 230,000 shares right back into the trading range. Nice gap back up in this one today. What else do we have out here? BioLine. Not familiar with this penny stock. It's got a lot, very light volume. Central Fund of Canada. This is a nice, interesting chart. Had a lot of volume, closed back lower, a little bit farther. I know this is not one of, or many people are not fans of it because of the load, I think, on the Central Fund of Canada. But huge volume, couldn't hold a high yesterday. Then a bounce today on light volume. I think we got something brewing here. Not exactly sure what. We talked about some of the banks and financials. Yesterday, we had a very nice low volume test of Citigroup, CIT. The April 7th low came in at $30.37, 6.7 million shares, 1.7 million shares yesterday. Well, let me see. I feel like I'm doing a PBS morning 6-year-olds thing. 6.7 million shares or 1.7 million shares? 6.7 or 1.7? I think that kind of tells you everything that you need to know on CIT Group and a lot of these banks. They did come down. They came down with some energy. This does not look bad, though. Energy from the April 7th low to the April 28th was very good. It was about 30% less from this June 8th high back down to yesterday's low. Along with the, 7 million to 1 or 2 million, what is that? 25% volume test yesterday. Not bad looking out here, at least on that one. Let's find some others out here. CUDA. Find some of these out here. Not a lot of these have made a great deal of signals out here today. So we'll continue to keep an eye on these. Now, Delta Airline, wanted to see if there was anything in this one. Of course, it did break through and go down on heavy volume. You had a break of the previous low with about the same amount of volume. If we look at the 14th, that's when it did go through the $40.03 low of February 9th. It had 15 million shares. It went through 15 million shares and continued down. This is the first kind of low volume day down here, and it's about 7.2. So maybe you get a pullback, or I mean a bounce back to this $40.03 level, but we shall see. But certainly in trouble. We talked about Digital Globe out here as not being a bad-looking stock, just because it's a standard Wyckoff buy pattern. That is, you have a huge sign of strength on the 28th of April, 2.5 million shares. It kind of meanders all the way back down here. And of course, you're testing that giant, huge 2.5 million share with 460,000 shares yesterday. Just a little doji out here today. You may get one more test of that under $20 level, $19.50 level, but not a bad looking chart. It's just not enough juice or gravy in it for me to jump all over it. Could make a case that Dr. Gold Limited, DRD, is in an ABC down. This did come off its low of May 25th. Energy on this little leg up here so far has been very light. What do we have for retracement out here? Did this thing come in? I mean, the buy was looking fairly decent out here. You had a beautiful confluence level around the $2 or $4.21 level. With that, just a tad higher than that, $4.36. So not bad. It did bounce and go just over its 682, 618 yesterday. That was 540. Went to 560, of course, gave it up back into the trading range. So you have to really look very light volume. DRD on that one. But of course, support's going to be around the $4.21 range, which if it could come back on very light volume might be interesting. Let's take a look at some others here as we have time. DSX, Diana Shipping. Wanted Andy Heck to ask, but did not get a chance for his guest last night about why, if the big commodities, iron ore, copper, all this stuff is supposed to be coming back, not just oil, just not gold and silver, why are these shipping companies continuing to do so poorly? But you know, you did get kind of another test. I'm suspecting, though, DSX is still headed back down to this February 12th low. That's a $1.95, 630,000 shares. You got a little bounce out here today, but I still think these things continue to bounce. But what a big signal in this one, which was the March 7th high at 2 million shares at $3.70. Pierced it by a dime, went back and closed below it on April 29th with 1.1 million shares. So 50% test of the high. You did it by proving the point, i.e. going above the previous high and closing below it. Normally, you know, it may even be a day or two later that it closes below it. It couldn't hold up there for a day, and that was it. Energy is not massive on the way back down, but again, this is not a stock that you can easily short. So I continue to think that these shipping companies, there's something going on out here. I don't know if it's the Panama Canal coming on or others, or just the continued glut of shipping without huge iron ore and wheat and some of the other dry shipping, bulk shipping issues to actually move this along. Let's see if we can't find a few others to look at during the day. Edwards Life Sciences. This is another one that looks like it could be setting up well. What do we have here? I need to check back in quickly. Oh, we're only off 4 points on the S&P cash. Again, be very careful about this market in the last 30 minutes. I suspect that there may be some fireworks today, a la the OEX days of 2000 to 2005. May have happened earlier. Maybe we'll get some comments from Tom O'Brien, but I didn't really participate that in until probably 2001, maybe 2005. I knew it went on before I started playing it, but huge action last 30 minutes of the day. We'll be back in a minute.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited time, 5-year, market-safe currency comeback CD. This indexed and U.S. dollar-denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY, or periodic rate of interest, is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com/TFNN now. This advertisement is sponsored content. Everbank is a member FDIC.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And what else can you say? Finistar, FNSR. Looking at this one, man, you blew through the high out here. We were looking at this one, I think, a week ago, maybe 2 weeks ago when this came up. But again, a standard Wyckoff standard buy pattern. On the 11th of March, it gapped up with 7 million shares, came back in with 1.6, kind of came back up through here, and 5.2 million shares today. Little hanging man out here. But looks like it's going to close above the March 22nd high. But these Wyckoff-style buy patterns do seem to be looking fairly decent. Let's get back to the financials out here. Need just a little bit different chart here. Gaps up in the FAS happened on the 13th of April. Did so with 6.8 million shares. Yesterday, pierced with 4.8 million shares, a little bounce back in here. Not a lot of volume, but interesting enough. And when we look at the FAZ, this also had a nice little gap down on the 13th, let's call it 2 million shares. Did pierce it yesterday with 2.8 million shares and right back into the trading range too. So light volume today. My guess is we're going to see more come next week. Again, you can email me at path@tfnn.com. I think I got a couple of emails to answer yet already. Fitbit, $11.91 on February 24th, 16 million shares. We have not touched that yet, but did get into a lot of those candles yesterday with 11 million shares and very light volume out here of 4.5 million shares. I suspect that we're going to get that February 24th low tested. But we're coming into it, and other than yesterday, a little pickup of volume, but not enough to hit that 16 million share mark. Maybe there's something in there, maybe there's not. Hard to tell. Fleet Court Technology, another one that had a bouncing off a nice gap up. The 18th of March, 2.2 million shares. A nice gap, came back, got a little test of that on the 7th of April. With 855,000 shares, been kind of doing that. Pierced it yesterday, though. Beautiful looking candle out here for a possible low. Breached it with 450,000 shares. Now back into the trading range, but light volume today. May get a little bit more test of this gap, but keep an eye on that one. That might have done enough consolidation to get done. Flexon Therapeutics, another one out here. That if it pulls back a little bit, could be very interesting. Unfortunately, you've got this gap down on the 8th of June with 3.5 million shares. But this gap up on the 26th of May with 2.3 million shares at about $11.50 looks fairly interesting. And you've got a high volume high around that mid $17 level that you want to keep an eye out for. Finistar, well, we already talked about that one. What else do we have out here? Fiesta Restaurant Group. Don't see anything in that one. Green Hill and Company. Nice low volume test of its previous low. When you look at the April 11th low, $18.79, 810,000 shares. Nice test yesterday, right back into the trading range with only 570,000 shares. Not a lot of volume today, but of course, not a lot of volume in the market at all. Still off just 3 points on the S&P cash, 2.5 billion shares. And I'm thinking we're going to have some fireworks the last 30 minutes of today with quad witching and a lot of people out of position. Looks like a very unstable market to me. It does not look like many of the expirations, and why I suspect maybe we've got that OEM or OEX flavor of the early 2000s maybe coming back to visit us. What else do we have? Gideon Activewear. Now, this is not a high volume stock, but nice test yesterday. May 19th low came in at 420,000 shares, 19,000 shares yesterday. Wouldn't be something I trade because of the volume. 420,000 shares to 190,000 shares, excuse me. But not a bad chart pattern out there. Nice test of the low. General Mills. Now, here's a big sign that even blind people could probably take a gander at. April 5th, huge volume, 7.4 million shares in General Mills. Colonel Mills over here, or maybe even Private Mills, yesterday, 2.6 million shares as it goes against this top, and a little hanging candle out here today. So keep an eye on General Mills, who is now headed to private, spitting on that light volume move. See what else we have in my big list of stuff. Genworth Financial. Very interesting chart. Another one of these Wyckoff buy patterns that does not look all that bad. Could be very interesting out here for a $3 stock. Nice gap up on the 29th of April. Did so with 21 million shares. Last 4 days, the 14th, we had 7.8 million shares, 5.4 million shares. Yesterday, 8.6 million shares. Today, about 4 million shares, all up against that 21 million share gap up. And that's what you want to see. A little consolidation out here might be very interesting if the market chooses to go higher on these, maybe the scare of Brit exit, which I don't think should scare anybody at all. I think it's going to be better for everybody. As one of my subscribers said today, I think it's going to work better for everybody except the Germans, which is probably true. They'll be left alone to support all the other freeloaders in the EU. What else out here? HIG, Hartford Insurance Group. This is kind of interesting move yesterday. I don't see a whole lot yet. Headwaters Company. Do we want to look at that? Yeah. I don't know. Exelon. I am gold. Heavy volume yesterday against the May 17th high that had 6.8 million shares. You got higher. You did close below it, but you did so with 12 million shares. So probably saying that you're going to get a retest of the $4.14 high before you go lower. Be interesting. Comex Gold Trust, kind of the same kind of chart, except just the opposite on volume. The IAU, you had a very heavy volume into the May 2nd high at $12.52 with 38 million shares. Yesterday, you got into it with 14.6 million shares. The day before, 10 million shares. So significantly lighter volume than the real big push, which was the 29th of April up here with 38 million shares. And probably a good example of why you need to watch light volume at highs whether it's anything, including gold. We come back, we'll look at Icon Brands, ICON. We'll look at some other things into the home stretch and into the end of quad witching on a very scary Friday. We'll be back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're back. What are we off? 3 points on the S&P cash, 2.58 billion shares on the New York Consolidated Tape. Well, they've given a market crash 2 days in a row that has turned to dust, at least, or at least 2 attempts. Volume nowhere close to the 4.8 to 5.2 billion shares. I would say that would signal a big leg down. So maybe it's a just wait and see now. But certainly we've had a couple of attempts to go lower. I think we've got a lot of people that probably shorted this morning. Maybe the close will be exactly like it was yesterday. Option market makers have been bullish almost all day long. They could be wrong, but they seem to be some of the best traders on Wall Street. The Icon brand group, very interesting test yesterday, spiked down with 2.6 million shares, closed back into the trading range, and that goes against the March 29th low at $7.11, 3.7 million shares. So much lighter test back into the trading range out here. So not all the charts, but there are a great deal of them out here that are looking like that. The energy down on this one, I do like. It did kind of pull back by about 20% from this April 27th high. We've been talking about it for a week, maybe 10 days. And that is we are in these doldrums where there's not enough energy to break down, not enough energy to break out. And depends on which way the wind is blowing that day. But we've now tried a couple of times to go lower. And as far as I can tell, not the kind of volume that you would look for in a market that's getting ready to blow apart. Another big sign out here is an ETF. This ETF is the Transportation Average Index Fund, IYT. The last big low was May 13th at 134.01, 840,000 shares, 50% of the volume. Big 50, we'll call it 50. What is it? What's his name? Fitty. Oh, that's what it is. 50% of that previous low out here. It went below the previous low. It closed back into trading range. Little pop back up here on light volume. Not saying this thing's going to take off. But if you were looking for some very heavy looking, bad looking ETFs out here, this ain't one of them. Actually, not bad. And again, the energy on the way down is about the same on the way up. So to me, this is much more of a market that is looking into a trading range that we can see. What else do we have out here? Nutrisystems. I think we talked a little bit about this one. Actually setting up fairly good. I'd like to see this thing at 23.50, but another one with a standard Wyckoff pattern that's setting up fairly nicely. The 4th of May, it gapped up with 1.8 million shares. It's kind of fooled around, got to 28.37, come back down here to 24.12. But just fairly light volume, 200,000 shares. So you got to look at this, especially off this $28 high, and then look at that nice light volume all the way back. Doesn't it get you just all hot and bothered when you see that low light volume on the pullback? It does me. Let's see what else we have out here. I had several questions about PAN-W. One yesterday, I said we check back in on this today. What do we have out here? 2 million shares today. So, we're out of time. 4.8 million shares on May 13th. 2 million shares today. So even some of these on downtrends finding a lack of volume, at least so far. In the meantime, sell when you can, not when you have to. See you Monday. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.